The UK just had something that hasn't happened in over 30 years, just happened today, and it's showing major signs of what is to be expected from the United States and the Fed. A lot of people say that, hey, Canada, the UK, some of these major G7 nations are just a proxy for what is ahead of the United States, and it is sending a major warning to the Fed. Do not cut rates until you got inflation under wraps. Well, is the Fed about to make a major mistake? And what are some of the signs being shown by the UK? We're going to get into all of this. But first, let's talk about the UK having this 30-year yield absolutely skyrocketing and crossing 5.7%. The first time this has happened since April 98. Despite cutting 5 times in 12 months, the yields are soaring. When you have higher rates, the rate cuts, something is seriously wrong. And that seems to be the case and the narrative here, as these UK markets are sliding, as debt angst drives that 30-year to a 1998 year high. So fresh off that sell-off and some of the major negative news that we're seeing out of the UK, it is very troubling. One, because of what we saw a little bit earlier with the UK and everybody now saying, hey, you know what? We are seeing the potential for a now rate cut for the United States. And the big narrative is inflation under wraps? How is everything going to continue to look? What are some of the, I guess, underlying issues that we could potentially see here? Well, what we are seeing is that the UK cut interest rates 5 times. Inflation is now up and bond rates are taking off, which you usually do not see with rate cuts. So we're going to continue to dive into this story a little bit more, because the nation's assets have become increasingly prone to bouts of weakness as the UK's precarious fiscal position and stubbornly high inflation make it a target. The problem for the chancellor of the, Rachel Reeves here, is that each route pushes up the debt costs and worsens the financial backdrop even more, leaving the economy at a higher risk of ever borrowing costs. And that keeps going up, right? So Bloomberg estimates that 35 billion euros or $47 billion budget hole without depressing economic growth. This may prove to be politically difficult. And look at this graph. I mean, this thing is taken off. Of course, we had the cerveza sickness not too long ago. But, when we see things like this, you got to question what the hell is going on here, right? So we've had some of the most, let's call it, interesting, U.S. conditions that have been made here, right? So this also explains why rates are still rising, even as financial conditions ease. The U.S. financial conditions keep on easing. Meanwhile, the yields are elevated and they refuse to drop. So the UK long-term borrowing cost keeps hitting that 27-year high as the pound is falling in pre-budget blow to labor, right? So this quick the closing point, a time to wrap, right? There's been drama in the bond markets, and especially in the UK. 30 years, they haven't seen anything quite like this. So when we look at some of these other nation states, we have essentially a peek into the future of what can happen for the United States if we cut too soon. Now, we're going to get into the United States and what that could potentially lead to, but let's get to the point here. I mean, we're looking at the potential of cutting way too soon right away. I mean, we've got an 89.6% chance that the U.S. is going to cut interest rates at the next Fed meeting, which is on September 12th. Literally 2 weeks from tomorrow, folks. 89.6% chance. And that keeps increasing, right? Yesterday it was 86. A week ago it was 83. A month ago it was 80. So it keeps looking more and more definite that we are going to cut these interest rates. And look, gold futures, gold, I did a video yesterday about how gold is taking off. It keeps pumping. So investors are very worried about the inflationary pressures that we've seen. And let's be honest here, that those inflationary pressures are not going away anytime soon. So we got to keep a close eye on what gold is doing because, hey, we're seeing, hey, a casual Monday night gold was nearing $36,000 an ounce, or 3,600, excuse me. And gold and Bitcoin tell the future. At least, hey, that's not just me saying that. That's other things, right? That's this Kobayashi letter. And what we are also seeing is foreign central banks now holding more gold in treasuries. I've gone over this a few times in the past live stream. So if you guys are seeing this for the first time, make sure you're hitting that subscribe button. If you're seeing it for the multiple times, why the hell aren't you subscribed yet? Please get that subscription for me and help me get to 1K subs as soon as possible. Now, either way, we are seeing the gold holdings as percentage of the foreign reserves increase like crazy. The dollars, everybody's moving away from the dollar. Now, we're also seeing a $100 billion 4-week T-bill sale, right? The U.S. is now set to sell $100 billion worth of it. The $2 trillion deficit and $40 million in federal debt are on the horizon. With enough time, bankruptcy is 100% certain on our fiscal path. Now, that is not good. Those words we do not want to hear. 100% certain, bankruptcy coming. I mean, that should put some fear into everybody because of what we could potentially be seeing in that near future here, right? So we got to keep a close eye on how the U.S. overall economy is doing and keep a close eye on, hey, you know what? Are we looking at the potential of a major default here? Because, everybody knows that, Trump has been screaming from the top of his lungs to get the Fed to cut interest rates. But is that a smart plan? I mean, we've got, just cues coming from overseas from our brethren across the pond here, just looking at, hey, is everything all peaches and daisies? Is everything good enough to cut interest rates? It does not seem to be the case, if you ask me, right? Because when we look at the UK, we see a struggling market. Granted, they've got a lot of other issues as well. Same with Canada. But what we have is, you got to ask yourself, is the United States economy great? And I would argue, and I'm sure a lot of you guys in this chat would argue no as well, right? Derek in the chat is saying, hey, we have to refinance $9 trillion by March of next year, and each point is $370 billion. So we'll see. I think letting a crash happen to cut rates like they did in COVID would be the best move, and I agree. I mean, to be honest, we've had just some reckless monetary policy, and this is not from, Donnie T and the new administration. He's having to clean up a lot of the mess that we saw, from the past 4 years. And granted, we had this scamdemic and, the cerveza sickness and everything that we see. But, the amount of massive money printing, we just have to essentially come back from that, right? It's very difficult to say, hey, you know what? Let's shut down the global economy for multiple months at a time and everything will be okay, right? It does not make any sense whatsoever. And look, I think this is a perfect way to show, hey, you know what? We cannot print our way out of this. The US M2 supply has changed at a 5.1% rate. It should be no surprise that core CPI inflation is up above 3% and rate cuts are on the way. After 10 years of 3% inflation, the US dollar loses 25% of its purchasing power. This on top of the 20% in value the US dollar has lost since 2020. Well, hey, you guys better be holding on to some assets here because, we're seeing everything just absolutely take off. And it's not slowing down by any means. We're going to go over the S&P 500 in a minute, but I've talked about gold a little bit earlier in this live stream. And look at this. First time in history, it's $3,600 an ounce. Gold is up 33%, and that's 3.5 times better than the S&P 500. Now, people flock to the S&P 500 strictly because, hey, you know what? The Mag 7, maybe we don't do that, but the S&P 500 is supposed to be that safe haven for everybody, right? They're supposed to be looking towards this and, saying, hey, you know what? S&P 500, it's just simple. It's clockwork. The stock market's always going to go up. We've got the Trump economy, all this and that. Well, people are flocking to gold as that inflationary hedge. So you got to watch what gold is doing to keep a good sign, and watch what everybody else is doing around the globe to see what could happen if the United States cuts interest rates. I mean, we see the pound crashing and burning. Granted, the dollar, the Dixie, is doing okay today, up 0.63, but still at 98. Still at that 98.3. So because we have gold skyrocketing in flight here, and we have the dollar, the Dixie, floating at this 97.5, and everybody going towards assets like the S&P 500. Granted, it's down a little bit today, but we saw the first time it was up over 6,500 last week. So the S&P 500 is hitting an all-time high. Gold is hitting an all-time high. Yet we have bond yields crashing around the globe. This should tell you something, folks. There is cracks underneath the surface, and they are looking to rise and increase, right? You got to basically flock to assets at this point in time, right? There's no way around it. Assets are going to be your friend. You need to keep them tight and keep holding on to as many assets as possible, because in my honest opinion, I think we're in an asset bubble. Now, we're going to see everything start to explode upwards, but that doesn't mean that it's in a healthy economy. That means that we're going to keep seeing that wealth gap increase because the rich own assets and quite frankly, the poor don't. So keep flocking towards those assets. And of course, that's not financial advice per se, but I mean, what we're going to have to keep a very close eye on is just the overall macro situation and what we've got. So make sure you guys are hitting that subscribe button for me and hitting that like, and keep sending these messages around so we could get all of our brethren, all of our American brethren out onto a life raft potentially. And I will be bringing you guys the news literally every single day this September. That's my goal. So keep me honest. So make sure you guys are hitting that subscribe button with the bell notifications. Join the 3 others we had in the chat. So shout out to Derek and McLovin, and I'll catch you guys all at the next one.